Hello and welcome for weekly fundamental outlook for Alex Macro FX. Let's start today with United States dollar. As we all know, United States dollar supported by Middle East tensions, strong inflation and labor market. So that makes Fed less dovish, waiting for cutting rates, holding restrictively, and maybe even hike in December. I don't think this will happen, but anyways, right now, United States dollar stays supported. So let's go and check some data. Here, United States dollar is neutral, nearly bullish. So central bank stance is bullish. COT is neutral, but what is important, bank research show bullish case scenario. Next week, we have main event is FOMC meeting with Kevin Warsh. It will be his first meeting as governor now in this year, so after Jerome Powell. So we will see how he want Fed to work. As I read, he don't want to communicate as openly as Jerome Powell before, and maybe he wants to create another sort of indicator for inflation because he's seeing that normal CPI, PCE it's of course lagging indicator, so it's a bit late as always, like Donald Trump say on Jerome Powell, Mr. Late, always late. In that case, we have seasonality is overall bullish, but still neutral with some pullbacks. I am seeing dollar being supported. Right now we have strong bullish trend on equally weighted index. It's like same as DXY, but a bit different. It is bullish. So I am seeing every pullback should be a buy right now based on such developments. Next step will be oil. We should talk about oil right now staying inside the range of 80 and 120, something like that. I can put it here. Basically, we stay at lows of the range. In that case, I don't really see oil breaking down unless we have solution for Middle East, but we don't have it because we have nuclear program issues and Strait of Hormuz opening issues. So if conflict is finished, yes, most likely oil will get a drop. But anyways, to open fully Strait Hormuz, you should waste at least 6 months or so, maybe even a year. So basically oil will still be elevated based on macroeconomic picture. In that case, I'm seeing more potential to go long oil rather to go short right now. But we will see further developments on Middle East. Right now, we get a lot of, uh, let's say, lying, posting, and uh, other stuff that don't really make sense and just create volatility. So we should focus on macro picture rather sentiment rates because it can be reversed same day as always. Trump can say next day I will blow up Iran and next day he will say I decided to stop. So we shouldn't focus on that at all and continue to go on macroeconomics. So next step will be S&P 500. Basically, we got nice correction on NFP day last Friday. But you should also notice that I have maybe limit order around 7,000 because I'm considering that AI story will continue to dominate markets, stock market, especially US market. So in that case, I'm seeing potential to go long on S&P 500. Also, maybe we will get some escalations with Middle East, and that can get us a nice level, nice deep pullback to go long. So I'm completely seeing that S&P 500, Nasdaq, and so on will continue going higher because AI story is not as a bubble like dot-com bubbles because it backed by real industry, not just something that people invented in their minds. Basically, let's move on into the next week. Next week will be very important. As I told you, we have FOMC meeting with Kevin Warsh. This will be main event for next week. So I would wait and see what he will say. I don't think I will really place trades in that case because it's very dangerous. So let's go and check other currency pairs. So we have Australian dollar index. I am seeing it continue going lower unless we get full Middle East resolution. If United States dollar is strong and Middle East tensions are not finished, coupled with weaker backdrop of Australian economy and Bank of Australia decided to hold now and wait and don't hike. So next move next week will not be a hike, but we should be very careful about forward guidance. I am still considering Australian dollar as hawkish buy, but we will need some deeper pullback. I think hiking cycle is not over. Let's check Australian dollar here. It's neutral, but central bank stance and COT report showing crazy bullishness. And also, banker search is neutral, and fundamentals received some small backdrop. So for me, it's just some sort of pullback to go long. Seasonality now here, as you can see, is bearish. So maybe as I show you, I would continue to short Australian dollar at least till this level. That's my plan. So next step will be Canadian dollar. Canadian dollar have very weak economy. We are in big downtrend. Even it's look like range, but it's still a downtrend. Oil going lower and doesn't support Canadian dollar as you see. We got better data last time, but in that case, it's still not enough. Last week we get Bank of Canada and forward guidance was neutral. They don't really think hiking rates yet. Dovish stance. So basically, I don't see Canadian dollar rise unless oil will rise further. For me, something like this will be, oh, sorry, something like that. Look, go here and I'm seeing Canadian dollar to continue going short. I will use this as opportunity. Maybe with United States dollar, Canadian dollar pair, something like that. So let's go to Swiss franc. Swiss franc right now staying downtrend, but big range. This year, when Middle East conflict started, Swiss franc wasn't supported because we got some sort of intervention, at least verbal intervention from Switzerland Central Bank. So they don't want Swiss franc being strong because it's hurting exports, and Switzerland is country that makes money basically on exports goods. So they don't want to get into deflation stuff. So they will defend level 0.90 for euro Swiss franc here as they did before. In that case, next week we have SNB meeting, but I don't think it will be some crazy event. They will continue saying same stuff, but maybe they will say something different. Let's see. For me, if we have risk on, I'm selling Swiss franc. If we have risk off, I have United States dollar, so I don't touch Swiss franc really. I'm wait and see mode. Let's check data here. It's overall neutral, but we have very strong seasonality. May after correction, so you should be careful with that because of flows get into Swiss franc this time. Euro. Last week we got Euro Central Bank hiking rates. Forward guidance was somewhat slightly hawkish, but based on weak economic performance and oil dependence, also strong United States dollar, I don't think euro can really be a buy. So I will look for shorts, maybe via euro United States dollar, something like that. But until then, I'm waiting for correction to this strong level over here. So let's see how it goes. Next week we have very busy calendar for pound. We have CPI, Bank of England meeting, labor data, retail sales, and also 18th of June we have elections or some sort of political event. If we get nice resolution, pound will get a bit, but I will avoid pound trades till we get full information about central bank policy and political stance, because it can go up, it can go down. We should wait. Right now, what you should focus on, we are in uptrend really, and pound really strong currency. It has high rates. It's not very good economic data right now, but it's some sort of neutral. Central bank stance is hawkish, COT is hawkish, but bank research is bearish. So bank seeing pound bearish. I will stay on sidelines in that case. Pound have strong bearish seasonality. So we will see. It depends. We always can get nice opportunity, but it should be right time to enter the trades. Japanese yen. Japanese yen will continue, or at least I'm seeing it continue going lower. We have major downtrend. Next week we have Bank of Japan most likely to hike rates and most likely to deliver hawkish stance. But investment banks researchers seeing this as not enough to convince market to go long Japanese yen. So maybe we'll get some sort of pullback, maybe like this. But after, eventually, I think we will continue going lower as always, because United States dollar is strong. Intervention is not enough because Bank of Japan don't show their real aggressive hawkish side. because data don't really support that hawkish side. And oil is elevated, and Japanese economy depends on oil. If oil is harming growth, but basically rising inflation, that won't help Japan to regain real inflation pressures and real growth. So I don't see really Japanese yen to go long. Anyways, let's see how Bank of Japan will commit. Next, we have New Zealand dollar. Ah, I did forgot one thing. Sorry, guys. So basically, we go to Japanese yen, we get neutral stance, bank research is bearish, central bank stance is hawkish, but as I told you, maybe it's not enough. Japanese yen here to continue go lower, so I don't really believe we will get some sort of crazy bullishness on Japanese yen. Next, we have New Zealand dollar. New Zealand dollar central bank is hawkish and hiking rates. But same time, economic data and Chinese data is not so good. And also, we have bad risk sentiment and strong United States dollar. So after Bank of New Zealand here delivering hawkish guidance, we got strong backdrop because of strong United States dollar and Middle East escalations, and also strong labor market for United States dollar. So as you know, New Zealand dollar is inversely correlated with United States dollar, same as Australian dollar. So till we have strong United States dollar, most likely New Zealand won't get a pump unless we get some sort of resolution for Middle East conflict, what I don't actually believe on. If you want to go risk on, maybe it's better to go via uh, indices like S&P 500 or something like that, rather going New Zealand dollar. So for me, it's right now it's a short. I will wait for my opportunity to go short against New Zealand dollar. Let's go and check. We have some sort of neutral scoring. COT is bearish, bank research is bearish, but fundamentals and central bank stance somewhat supporting this. And if we go to risk regime, we can see neutral risk sentiment. So basically we should lean to specific catalyst, central bank meetings, data points, and so on. So next week will be very, very important, especially due to FOMC meeting. And in this case, I would wait till we get Fed Wash and his forward guidance. So let's see. I recommend you to avoid placing some positions before central bank meetings because it can be both sides and 50-50 is not an edge. So I'm seeing you next week. Have a nice trading week. Goodbye.